Well, good afternoon, everyone. It's 20 past 5 here in the UK on Friday, the 7th of October. Well, as you all probably know, the non-farm payroll report has come and gone. It was an exceptionally good number, well ahead of forecast. And as I mentioned yesterday, perversely enough, a good number is bad for the stock market in this environment, in that it gives extra ammunition to the Federal Reserve to keep going on this program of pushing up interest rates, getting rid of inflation. I didn't think they were going to stop that with inflation at 8% plus, and the market seems to agree with that today. The S&P 500 is down 81 points on the day, well, from yesterday's close, most of that made in a gap. So, as you can see, all of the measures, let me see, the short-term trend on VectorVest is still up, the underlying trend is down, and we've got a confirmed down in place. The medium-term market timing system that I personally follow, called the DEW, is also down. If those names are like Outer Mongolian to you, then just come along to my talk on a Monday afternoon and I'll explain those for you. Systems for short-term traders and systems for longer-term traders. So if we have a look now, and I will go straight to the S&P 500. That's the S&P 500 today. Let's look at the daily chart to start with. And there's the daily chart. And as you can see, we've got another one of those darned island reversals. And that is quite a potent signal for some follow-through. As I mentioned yesterday, if you have a look at the video, the market is making falling bottoms. Both the SPX and the VectorVest Composite are making falling bottoms. And the indicators, the momentum indicators, are also making falling bottoms. And that invariably means that there's more downside. So, and that's what I tried to get across yesterday. If we do look at this now over on intraday charts, that was the gap down. And that little line is where I shorted it at the open. And I had a young fellow with me this afternoon, and he said to me, "How did you know it was going to, in fact, fall from there?" And I had to tell him that I didn't. Okay, if I knew for certain that it was going to fall from here, I would have bonded up the little flat and put the whole damn thing on it, but I didn't know that, so I just sold it as it went down through that low with a 10-point stop loss, and it went right down as to this level where I got out. I'll show you why. To tell you the truth, if I wasn't speaking here now, I would have gone short here again. You'll see what happens. There's quite an important level in the market. So 20 points to the good. And I'm quite happy with that. I'm actually ahead of where I want to be for the 7th of the month. So if we have a look at the overnight chart, this is an hourly chart, and that's that big sell-off. That's the gap that I pointed out on the floor session. But this happened at 8:30 American time. The floor doesn't open till 9:30 American time. And we're pushing on this level. Now, this level is 62% of that. And that's why I actually ran for cover down there, because I felt that the FIB players might have a go at that level. And they did. And my dear friend, I'm no doubt, my dear friend Larry Pesavetis would have jumped into the ring somewhere around there. So I took my 20 points and hoofed it. Is it going to break through this level? Well, it's starting to push certainly strongly on that level. Nobody knows what's going to happen next, folks. Nobody. But all we can do is have some simple set of rules and do our best to try and follow them. So I look at support and resistance levels on the hourly chart and the 4-hourly chart, and then try and use those for sensible targets. I felt that was a sensible target this afternoon. Time will tell whether that thinking was right or wrong. If we have now a look at oil, oil's the star of the day, moving up strongly. And I pointed out this level and I sat and I talked about that every Monday afternoon for about 4 weeks on the weekly chart, and it slipped and it went to 78% of this last run up, and now it's pushing up strongly. And you've all read the background news about OPEC cutting supplies, etc., etc., etc. That's moving up very strongly, and I have a position in the XLE. I've been asked by a lot of people why I took the XLE as opposed to a oil stock. Maybe I'll try and answer that in a second. And the other position I've got is, I think that's oil. The other position I've got is in gold, and I'm long gold from 1774. I reckon that it's going to pull back, folks. And if it does pull back, and my trusty old 8-day stochastic gets oversold and we get a reversal, as long as that reversal occurs above this low, then that will be, I think, the time to load up on this. But we're a long way from that already. And I've got some videos on YouTube where I went through the rationale of why I was interested in this point, and I sat and waited on it for weeks, in fact. The monthly chart was saying yes, the weekly chart was saying yes, and the daily chart, in fact, said yes. That big outside day that occurred, and I got in somewhere only about here, 1674. So a long way to go on that trade. And I have the GDX running, which is marginally in profit. I've got that spread bet in gold itself, and I've got Pan-African Resources running. In oil, I've got the XLE, and I've got a big unleveraged position in Shell. We shall see how that goes. If we now have a look at the American stock market, and I'll do my best to try and answer why I, in fact, bought the XLE rather than a specific stock. If we have a look at this thing on VectorVest, which is really cool, called Unisearch, and I've written a search, and I've been using it for a long time now. It uses uses the shortest term market timing system on VectorVest, which is the primary wave, which turned up, I think, on the 3rd of October, 3 days ago. It looks for companies that are growing their earnings and growing sales strongly. And it couldn't be really simpler, but it looks for earnings growth to be greater than 40%. Stock must have a volume of greater than 200,000 shares a day as measured by a 50-day moving average of volume. It's got to be above $10. Now, the comfort index is a measure of the long-term trend, and that must have its nose above water. 1. That measures the technical long-term trend of the share on a scale between 0 and 2. Above 1, it's at least pointing upwards. The stock's sales growth must be greater than 40%. And if you look back over the last 30 or 40 years, that's been a that's spotted about 80% of all the winners. And I've also asked for the safety and the predictability of the earnings to be greater than 1 on a scale between 0 and 2. Less than 1 means that the books are up and down, in and out. Greater than 1, it looks at the balance sheet, the income statement, the cash flow statement over the last 5 or 6 years, and makes a judgment as to whether the numbers and all those ghastly ratios are getting better or not. And above 1 is reasonable. It's fair safety. If you're a long-term investor, then you may want to get that up to 1.3. But we're not long-term investors. This is using a primary wave, and I want to be in the moves for 3 to 5 days. Now, when I ran that on the 3rd, which was when the primary wave turned up, I run it again, and those are the companies that it spewed out. And every darn one of them is an oil or energy company. And that's abnormal, folks. I've been running this search for a very long time, and that's abnormal. Normally you'll get, you can pick across the board in the top groups here, but the only darn thing that's moving and growing earnings strongly and growing sales strongly are in fact energy oil type stocks. And when I looked at these, I said to myself, rather than buying a stock, I'll in fact buy the XLE, the tracker. So these have done well. And if I just do a quick search of the top 8 over the last 3 days, I think these are up 10%. The market's up next to nothing. And that's 863% annualized. So, and every time you get a primary wave up, you can run a simple search like that that'll find the companies that have got outstanding growth fundamentals and that are going the right way. You could certainly add a momentum indicator. You could add that the shares above the 50-day moving average, or you can simply have a look at the stocks. Once you've got a list of the top stocks, then you can actually have a look at them and apply some technical criteria. This stock, we discussed it at our meeting up in Manchester the other night. That's this stock, and I was in the stock a little bit here, and now it's moved up. I haven't got a position in it. As I say, I've got a position in the XLE. If we now go to the viewer, that's the 2 positions that I've got, XLE and this GDX. GDX is down 2% today, and the XLE is up 1.16%. If I go back to the 3rd, where the signal, market signal pitched up, and just quick test all of those. As you can see, GDX is flat. Last time I looked, it was up a little bit, it's pulled back a bit, and the XLE has done pretty much what those 8 stocks have done. As I say, that's abnormal, folks. When you run that search, normally they're not all from the one sector of the economy, but in this case they were. So I felt the XLE was a easier, more diversified place to put my little bit of loot. If we go back to the market itself, there it is pushing down, and I suppose I should be short from there with a tiny stop loss above there. I'm not, so but I'm quite happy with that 20 points for the day. Unfortunately, that island reversal that I'm watching, it's 5:30 now. It doesn't close to 9, so a heck of a lot can happen. But that island reversal is quite a bearish phenomena, especially in a downtrend like this. As I showed in the video yesterday, rarely do these sell-offs finish without the price making a falling low and the momentum indicators making a rising low, and that's known by technicians as bullish normal divergence. Anything can happen if the Fed were to backtrack and pivot, that word used by the financial journalists at the moment, then we could get a V bottom. But with inflation 8% and a strong jobs number that came out this afternoon, strong unemployment that came out this afternoon, I actually don't see that happening. So I hope this helped, folks. The only sector to be in would seem to be oil. Just remember that nobody has a clue what's going to happen next in this environment. I've been advising vector-based customers for the last 3-4 months now that I believe, and clearly I could be wrong, and I'm frequently wrong, I believe that the oil market is starting to look mature. It's starting to look crowded. If you're an Elliott wave, we would have seemed to have made 5 waves since the low in March 2020 or April 2020. So I've been advising vector-based customers to look on positions in the oil market, not as buy and hold, put them into a trust and leave them for your grandkids, but more swing to position trades that need to be managed carefully at this stage of the cycle, both in oil and in natural gas. So have a great weekend, folks. And anybody who wants to come to the VectorVest Q&A on Monday afternoon, just shoot me off an email and I'll send you an invite. David.Paul@vectorvest.com. Take care of yourselves. Bye-bye.